Volatility. It's really weird right now. If you look at just like the US stock market, volatility measured by the VIX, which is a measure of volatility that tracks how much people are willing to pay for options on the S&P 500, volatility is precisely average at around 20 on the VIX. Not high, not low, and it's been in the lower half that all the action has been dropping from 20 down to 12 and then bouncing back up. You've had a lot of volatility in there, but we've never moved up to the higher part of the volatility range. That's peculiar because we're seeing huge volatility in other parts of the financial markets. If you want to look at just stocks, what we've seen is this huge move up in the Shanghai Stock Index. It was up like 63% in 2014, and then on January 19th, fell by 8%. And the only reason it only went down 8% is because that's about as far as, there are limits on how far stocks can go down in a day on that exchange. You had a lot of stocks, 100 stocks, indeed fall the 10% limit. So that's incredible volatility in one day. People are looking to see where that's going to continue. And then you look at things like the volatility in the euro set off by the Swiss National Bank's decision to break its cap between the franc and the euro, where on the 16th you had, January 16th, you had a 40% fall in the value of the euro against the Swiss franc in half an hour. I mean, or you go back even a little further, you go back to October, and you go, well, there was a big sell-off in treasury bonds, and the movement was the kind that basically we're talking about really something way out on the skinny end of the probability curve. Very low probability event. Statisticians say that it's an event that should happen in every 1.2 billion years. It's the kind of thing that's not really terribly meaningful. But all these things have one thing in common, that they're all sort of products of liquidity, what we can call liquidity pockets, places where suddenly there's nobody on the other end of the trade, that you couldn't find somebody in the treasury market to take the other end of the trade, or even really very, very clear in the euro Swiss franc trade, you couldn't find anybody. There was simply no liquidity. Nobody wanted to do a deal one way or another. No one was going to take up the other end, which is extraordinary since you've got this massive amount of liquidity sloshing around the world. We all talk about the money created by the central banks, and it ought to be out there, but it doesn't seem to be. It seems to be when you get something like this, when an event like this happening, all liquidity disappears and people run to the sidelines. It seems like there are structural changes in the market which have a lot to do with this lack of liquidity, and I think we can count on that lack of liquidity producing volatility as we go forward, because I think those structural changes really are not limited to just one sector, but really across the board, and I think that makes the financial markets as a whole fairly volatile and fairly dangerous right now. This is Jim Jubak for Jubak Asset Management.